This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the first week of March 2022. Actually, the week began on February 28th, but who's counting? Look, we knew this was going to be a crazy week when it all started because over the previous weekend, the U.S. and its allies had effectively cut Russia out of the SWIFT system. This is going to have major impacts on the global monetary system in the weeks and months to come. But we knew it would make for a very volatile week in the commodities and in the global markets, and it certainly did as it played out. Now, back on Monday, February 28th, besides just discussing that, we looked at a number of other indicators as well. One of them is the TIP ETF. It's an ETF that holds Treasury inflation-protected securities. When it goes up, real interest rates are going down. And, of course, vice versa. It had been falling in the first 6-8 weeks of the year, which meant real rates were going up. But, man, what a big reversal we saw beginning a couple of weeks ago. It continued as this week began, and it was all part of what we discussed on Monday, February 28th. All right, we'll start with that chart of the TIP. Again, from a high back in November up near 131, okay? Rallying, going down in December, rallying again into the end of the year, finishing the year up like 129.30, plunging all the way to 123 just a few weeks ago when everybody was focused on the Fed and the 8 rate hikes and all that other crap. Blasting back up through its 50-day today and now setting its eyes on 128 again. Remember how important 128 was? Well, guess what's there now? 128 exactly is the 200-day moving average. Maybe we'll get there tomorrow. Again, rising tip, lower real rates, higher inflation expectations. That's what that's telling you. With all commodities soaring, we knew it was going to be a big week for our precious. And one of those precious is silver. Silver moving sharply higher, but not yet breaking out. Certainly a long ways away from breaking out of its big bull flag that it's been working on for about the last year and a half. But again, we knew it would be a big week for silver, so that was just one of the charts we discussed back on Tuesday, March the 1st. Silver, again, on the daily chart, still has a ways to go. It also isn't extremely overbought. It's just at 67, and you can clearly see the levels now to watch. I printed this at 25.42, but like I said, I got a last at 25.54, and that's important because 25.50 is key. I finally broke down and bought today a $26 call with some of my grain profits. Why? Well, I don't know. I figured we get above 25.50. We're at least going to 26, and above 26, we look to close this gap that is on this chart. It's not really a gap because, well, we're looking at just the May contract, and again, where that line ends with that green candle, that was actually June the 16th, the day everything, and then the Fed started to tighten. And that's when silver broke down. So I don't see why, with the realization that the Fed is trapped and, none of this 10 rate hike garbage, why isn't silver going at least back to where it was on June 16th, which, as you can see, is up there about 27.25. Okay, that's why. On top of everything else, I decided I'd buy that call today. It expires later this month. So, for what it's worth. Silver on Wednesday the 2nd. But this time we looked closely at the silver mining shares. There's an ETF that tracks those as well with the symbol SILJ. With gold moving up, the gold mining shares moving up, now silver moving up. The silver mining shares hadn't done much yet, which maybe presents a profitable trading opportunity. We'll see about that. But we looked at silver and the SILJ on Wednesday, March the 2nd. Now, I want to show you this because I put in an option trade today. We're going to close with this, and I want you to see why. As I mentioned, I bought a silver call. It expires at the end of this month, so I didn't buy a lot of time. Today, I also bought a call on the SILJ. I've been talking about the SILJ lagging and needing to catch up for quite a while now. Well, today, with silver being firm, the SILJ didn't do jack. And you can see now when I plot the two together, the SILJ in candlesticks and May silver is a blue line. It would appear to me there's room for the SILJ to rally at least a point if silver hangs in here. And if silver goes higher, you would think the SILJ would move to catch up. So I bought myself a 10 $14 calls on the silge today. And again, we take this all off and just simply look at the chart of the silge itself. Again, no reason to think it won't go to 1450, but really, I mean, if silver's looking to close the gap that was put on it way, like I just showed you, back there from the middle of June, right? If that's where silver is going, then why the hell isn't the silge going to go up here to 1650 or so? And you say, okay, well, maybe it's not going to fully catch up. Well, why didn't it go to 1550, 16? Our Thursday Conversation podcasts are always a free public service that we post at TF Metals Report. You don't have to be a member to listen. We post the links on Twitter. You can always find them there, and you should always try to put it on your list of things you want to hear each week. We always have good movers and shakers in the industry, and man, we talk about more than just the precious metals. On this Thursday, March the 3rd, I spoke with my old friend Tom Luongo, who runs the site Gold, Goats, and Guns. Tom describes himself as an original turdite. He said he was probably one of the first 20 people to sign up for TF Metals Report back in the day, over a decade ago. And now, man, as he found his voice, he is a very respected geopolitical, macroeconomic observer. You can, again, through his website, but his work is often picked up by Zero Hedge and other mainstream news sites. So it was great to get Tom in back on Thursday, get his thoughts on geopolitics and what this all means for monetary policy. Here's just a 1-minute snippet of what we discussed. But again, I encourage you to go to TF Metals Report, find the link on the homepage, and give the entire podcast a listen. Like you said, if you're Russia, you need to back your currency with gold to restore confidence, let your people weather the storm, because that's clearly where this is headed. Then why not blow up the price by forcing, or as best you can, a change to the system so that now you've got even more leverage.
Yeah, no, you're right. They've been the ones. Who do you think's been the one steadily underneath bidding up the lows? Like if you look at a price of gold on a weekly chart for the last 5 years, you'll see a series of higher lows that is unmistakable than any halfway decent trader, which I'm not, but I'm a pretty decent chart analyst. I will tell you that's an accumulation pattern,
right?
Like and the rest of it is just noise. And so it's a massive accumulation pattern that's been happening since the low in gold in 2015. We have a 7-year accumulation pattern below 1900 or 2000, now 2100. And once we blow above that, this thing goes ballistic. Mm-hmm. And they've been desperately trying to keep the price. Well, they painted the tape on the monthly close on Monday below 1916, right?
Right.
And then they immediately had to back off because we moved into the next month. The quarterly chart for gold at the end of March is going to probably tell you the story on everything. The same thing is going on in silver. Have you looked at the price of industrial metals, people? Everybody's focused on gold and silver, but let's go look at like the price of lead and aluminum and nickel and all this stuff. And you're like, the world doesn't run without Russian aluminum, doesn't run without Russian nickel, doesn't run without Russian titanium, tungsten, lithium, rare earths, cobalt. Like it doesn't run without potash. Like I can go on and on and on and on and on. And they're a net creditor economy with a trade surplus and 18% debt to GDP. And okay, so fine, we froze $300 billion worth of their foreign exchange assets with $350 billion in the bank, or $400 billion, not including their sovereign wealth fund, which is another $300 billion. By the way, 25% of that is also in gold. Add that to the Russians' foreign domestic gold reserves, plus whatever they're telling us they're not telling us that they have, which I'll bracket another 50% on top of that. The same with China. China's going to come out in the next 6 months, Craig, and they're going to say, oh no, we actually own like 6,000 tons of gold. What do you think the price of gold does at that point?
And on Friday, March the 4th, we end the week as we began with commodities soaring. Base metals have been going crazy all week. Copper moving out to new all-time highs. Wheat has been up every single day this week, limit up. And now we're looking at things like the tip. Remember we talked about that back on Monday, how that measure of real interest rates was looking to perk up the tip way up again this week. And all of this now is impacting COMEX gold. It's a little too early to look at the weekly chart, as we still have about an hour and a half to go in the COMEX session as I record this, but we're at 1967. And if we can close up here above 1965, it'll be a very important weekly close, signaling we got a shot at a number that begins with a 2 as soon as next week. Now, look, if you enjoy these podcasts, I'm glad. That's awesome. But you really need to join TF Metals Report. So I'm going to make an offer here, only to you podcast listeners, whether on Spotify or on YouTube. Time to join TF Metals Report, even if it's just for a month, so you can see what it's all about. If you go to tfmetalsreport.com/subscribe, you'll get all the information about how a subscription works. If you sign up and you enter the coupon code YT for YouTube, how about that? Nice and simple, YT. You'll get 50% off your first month. That's not that much money. It's $7.50, but it'll make the cost of TF Metals 25 cents a day versus 50. You can kick the tires for a month and see if it's valuable. I would tell you at this point in time, it's extremely valuable. So again, go to tfmetalsreport.com, click the subscribe button, check out, enter the monthly or the coupon code YT, and you'll get 50% off your first month. Hopefully you will see us there. If not, just keep listening to these podcast summaries every week, and we'll have another one for you next week. Thanks for listening, everyone.